Good morning and welcome to Morning Markets with True Potential. Today we'll be looking at how markets digested Credit Suisse takeover by UBS and how central banks across the world came in and stepped in to provide market stability. The early jitters we saw in Asian markets were quite quickly calmed down as the European session evolved. We saw early gains by safe haven assets like gold and government bonds and dollar being given back as the trading session evolves. So what was behind this calmness? There was a couple of things. We saw a number of central banks coming and providing excess liquidity into the market to provide stability into the markets. We also saw UK and European regulators coming out and reassuring bond investors that they will be the Tier 1 bond holders will be treated fairly and ahead of capital and equity investors, as was the case in general, which was not the case in the Swiss regulators took the Tier 1 capital took a first hit in acquisitions of Credit Suisse by UBS. So it's quite a wedge been drawn between the two regulatory regimes. We also saw European Central Bank's President Christine Lagarde coming and speaking to European Parliament and delivering message that the central banks remain firm and is resolute to provide financial stability in the Eurozone banking area and reassuring that the central banks will do whatever it takes to provide maintain the financial stability in the zone. So what does it all mean for markets, and what will be focused for going forward for this week? Again, the focus will turn back on the central banks and how the interest rate cycle evolves from here. We will see Federal Reserve, which kicks off its two-day meeting today. Expectations are that tomorrow they will deliver around 25 basis points rate hike, but there's some chance that they may actually do a pause and not raise hike, and again focusing on financial stability before the inflation. As we know, the inflation has been coming off over the past couple of months, and that continued trend we expect that trend to continue, especially the energy prices, which have been coming quite remarkably off. So I think the cooling in inflation provides some relief and some cover for central banks in general to remain dovish. We'll also saw Bank of England on Thursday delivering their interest rate decision. Before that, we have tomorrow the CPI and the inflation print for February. That will also guide what Bank of England does in general. So in all, I think we expect the central banks to be a little bit more considerate and have a little bit more dovish message overall in prioritizing financial stability as the inflation continues to ease off. As these developments come, I will keep you informed. But for now, we will leave it there. And thank you very much for watching Money Markets.